Hello everybody, it is May 20th, 2022. We're going to go ahead and take a look at the Bitcoin chart now. First up, I'm going to look at what I said on Monday. And at that time, it was pushing up higher into the 30K, 31K area. Wasn't quite clear if that correction was done or not. It could have pushed up to another high if it wanted to, 32 to 33, which is still the case. But I do view any pump into that area as a place to add hedge shorts. I am still fully expecting one more drop into the 26K area at least, and potentially as low as 22. All of this still applies. We really didn't get that much movement this week. But I still want to point out, and I am going to say this again today, the big picture. This is likely a major bottom. Okay, I'm accumulating spot buys on these dumps. I am hedged short, and I am hedged short 100% at this point of the spot buys that I did. I think my average for the spot buy right now is about 28K, and as we were up in the 30K area, I was hedging short on that. So I'm ready for another dump down basically, but I will be accumulating more on that dump. All right, so let's take a look at what has happened since Monday, and like I said, not too much actually has. Today's the 20th, that means Monday was, probably right around here somewhere. So it was right around this time when, potentially, this was, I think I was viewing this as an ABC, this was X, that was Y, so that was kind of the top there. Since then, it's continued to just be choppy. We've not had any follow through from the bears, and because of that, this looks like an ABC down. And because there was no follow through, that was a 3-wave move instead of a 5-wave move down. I was then looking for potentially higher, extending this Y wave up, and now I'm viewing this as, best counted as W here, X here, and potentially a Y up there, although not necessarily. It could certainly break down sooner rather than later. But in any case, this is all still part of this corrective fourth wave. In my opinion, this is all part of the fourth wave. Nothing here is indicative of a bottom having been struck at this point in time. So the only reasonable expectation is still to see another move down for the fifth and final wave that we've been waiting for. Okay, so we are getting near the end, hopefully. We're hopefully getting near the end. Now, if you remember, like way back, it wasn't even that long ago, but back here, when we were coming up off of this low here, and throughout all of this corrective action, I was looking for this to happen back here, and it just continued to just chop, and that was part of the larger fourth wave. And because Elliott wave is fractal, that actually makes sense what we're seeing right now, right? This is the larger degree fourth wave right here. And during this time, this was back in the January through March, it was 3 months of chop. I was not convinced a bottom had been struck. I was expecting lower lows, but all throughout this area was choppy. And it was long and drawn out and super annoying. But we ended up with a W, X, and Y right there for that fourth wave. So, now that we're into the fifth wave of the fifth wave, seeing this smaller degree fourth wave take a similar shape makes a lot of sense, because like I said, Elliott wave is fractal. So we may not be done. This can absolutely be W, X, and we still need to push higher for Y. And that is kind of what I'm expecting. Now again, we could absolutely see a breakdown sooner, but do not be surprised by a move up higher. It likely won't go too much higher than 32, even 31.7. If we look back, once again, fractal nature of Elliott wave, if we look back here at this move off of the low, and we draw a fib extension for this ABC, you can see that I'm sorry, I want to look at this ABC here. My apologies. You can see that on this ABC, let's make that red or something so we can see it. This is the 618 fib right here. Okay, and that's the top. That's where W topped out. The C wave of W topped out of the 618. Okay, so now that we've got a larger corrective move forming potentially here, I've got a fib extension drawn here to the W, down to the X, and we're looking for a move up to the Y. Because this ended at the 618, it's reasonable to assume that we might end at the 618 here. So we may just get about 31.7. May not want to go too much higher than that, although it can. It's got room all the way up to about 35, to be honest. In the larger picture, it really shouldn't go above 33.8. That's the 0.5 fib of this 2 and this 3. So we shouldn't get above that before falling down. However, we have seen crypto, especially altcoins, do that, where they break that even though they shouldn't, and then they still fall. So just keep that in mind. But I think the most reasonable expectation, all that being said, is that we get somewhere just right here in the bottom of this red box if it wants to go up. So 31.7 to 32.5 seems like a relatively decent place to add to hedge shorts, and that is where I plan on doing that. But regardless, I am already hedge short. I am ready for this move, potentially down here. Or we could be making an ending diagonal, which would actually be my preference, to be honest, because that would end this correction a little bit before we get to this area. I'd really prefer to stay above 24, 25K. So if we can just kind of thread the needle where we take out this low, but we stay above like 24 to 25K, just come down to right around here in this, mid 25K area, maybe mid 24K, I'd be happy with that, but not actually reach this orange zone. That would be my preference. I don't know if that's what we're going to get, but it would be my preference. So the way that would work, unfortunately, we really don't have a good B wave here, and so I'm hesitating a little bit with this count, but I'm ready to put it on if necessary. And I think the way it's going to do it is basically this. We have A, B, C down, okay, and that might be in X, which means we would then get A, B, C up in Y. And again, this kind of leans, because B came all the way down to where this started, it leans in favor of just getting like a very minimal push up here for C to about 31.7, just FYI. So, and in fact, let's put this in yellow here. I got a little off track there. This is, we're just going to call this the primary scenario here. Yellow, seeing a move up into yellow Y of yellow 4, up there around 31.7 to 32.5. The alternate, going back to the diagonal scenario I was talking about, would be something like this: A, B, and C. And let's make that red, I guess. We'll make that red as sort of an alternate scenario here. That would be ABC down in a first wave instead of an X wave as part of this correction. And then if this had looked like a 3-wave move here, I'd be happy to call that an ABC up for a second wave. Because it doesn't, we may in fact just get A, B, and then not get a C all the way up here, but instead get a C that ends a little bit lower. Something along those lines there. And then we can get, this would be first wave, that's second. So we wouldn't actually know where to draw the diagonal exactly until the third wave is done, but we would essentially tag it to here's 1, here's 2. When 3 happens, then we've got an idea of where this channel is. We tag it to 1 and 3, and then also to the second wave like that. And then we would have an idea of where that's going next, because we'd have a 4 and a 5 potentially like that. And like I said, we can't really tell what that's going to play out like until the third wave happens. And it is a possibility that this is the top of the second wave here in a diagonal. This could be 1, 2, 3, 4, 5, something like that. That may already be done. That would be kind of what I'm expecting if we get a more immediate breakdown. I believe it would look something like this, and that would just give us that slightly lower low, probably without going significantly below 24 or 25K. So I know that is confusing. We don't really have too much information to go on right now for the immediate future, but basically I think what I'm trying to say here is that this is all corrective. So a push down from the bears right now would really make me think this is a diagonal, an ending diagonal, which is actually very bullish in the longer term, because it means there's really not much conviction down here from the bears to push it down further. The alternate would be we get up here and then we see an actual impulsive wave down for that fifth and final wave, and in that case we would likely get a little bit further down into this ideal 22.2 to 23.8 region that the higher time frame chart is calling for right now. So there's really not much to do right now. If it pumps, head short. If it dumps, I'm picking up spot buys, and that's pretty much all I can say about that at the moment. So we'll see what the weekend brings. Weekend action is always ridiculous, and usually it's a good bet to counter trade whatever happens on the weekend. You know, if we see, especially if we see this dump in like Saturday and Sunday, we get a new low on Sunday, it's pretty likely to bounce then Sunday night or Monday when actual trading opens back up. So that'd be nice, just so that we get this done and over with. I've been waiting for months and months and months for this correction to end. As you know, I've been sitting in cash since December. I sold all of my crypto in December, all of my stocks in December, or a majority of my stocks in December. And I've been waiting in cash pretty much until now. This is the first time I'm putting my money back to work in the market, really, in any substantial way, for both stocks and crypto. Alright guys, that's all I've got for you. So hit the like button, hit the subscribe button for me so you can see the update that I do on Monday for you. And take a look at the suggested video as well. And I will talk to you all on Monday. Have a good weekend.